The price of Bitcoin has been rising for the first few hours of this week. $28,171 is the current price of Bitcoin. However, it doesn't stop here. This week is going to be very interesting. Wednesday this week, the Fed is putting out their interest rate hike and it's expected to come in at 0%. If that comes in at 0%, Bitcoin without a shadow of a doubt becomes worth more than $30,000 per coin. There are many things that people aren't considering in the markets right now, such as the Credit Suisse being taken over by UBS, being a failed takeover before it's even begun. If I show you this BBC News page right here, you're able to see that basically the BBC News is already reporting that the UK banking system is apparently safe after Credit Suisse rescue. But on the flip side, it's not, because thousands of city jobs are at risk in Credit Suisse crisis as UBS has taken over the bank, and at the same time, nobody seems to be looking at the financials of UBS right now. These are the financials for UBS, and I've highlighted a few of the key figures on the page. We've got net investments, currently $437 billion. Net investments, what does that mean? That means money that they've got in stocks or bonds or things that they don't necessarily have access to. They're broken down below here. You can see that they've got in a live trading account, $99 billion. You can see that they've got in federal funds, $62 billion. Mortgage-backed securities, they don't have any of. However, they've got other investments, $171 billion. What is other investments? Well, it's probably not liquid investments. That's not money that you can use to pay out people if they were to withdraw. And this is where the whole theory gets quite interesting, because if there is a run on the banks this week from institutional clients that want to withdraw from Credit Suisse and from UBS don't have the money to pay out. Let me show you why. You can see here they've got net loans of $371 billion. This is money that they're counting as assets. You can see here this falls under the assets tab. An asset is not money that you've already given out to somebody else. That is not classed as an asset, but they've put it under their asset tab because they can do under the new regulations, but after the deregulation, under the most recent administrations that we've had in government, because we had severe banking deregulation. Now, when you have that, it allows them to put these loans into their assets tab. When a loan is not an asset, a loan is a liability. At the same time, their loan loss allowance reserves are only $724 million compared to the value of their loan. So if people defaulted on these loans, that's the only amount of money that they've got that they can pay that out with. And that's clearly not enough money. It's about 450 times smaller than what the overall number should be. The overall assets they have, including the loans right now, is about 1 trillion Swiss francs, which is about 1 trillion pounds. I mean, Swiss francs, I think, is 1-to-1 with the pound pretty much, if I remember correctly. I might be a little bit off on that. However, it doesn't really matter. Total deposits, 485 billion. Total on-demand deposits of that, 167 billion. That means that just like that, gone, they could have a 167 billion withdrawal. And the question is, can they pay out on a $167 billion withdrawal? Well, they can't from the loans section. Can they from the investment section? No. So therefore, you've got the total cash section here, which is smaller than the overall amount of basically on-demand cash that they have. At the same time, customers' deposits that you've got here, 318 billion in savings. Again, they can be withdrawn at any particular time. The total debt that they've got within their account is more than what their overall on-time deposits are, so they can't pay out the debt with those deposits. Basically, if we see a bank run on UBS is going to fail. Without a shadow of a doubt in my mind. I don't know why more people aren't seeing this. You'll probably see it kind of take place over the course of this week. Because another thing that you'll see within this, in fact, let me see if I can find it, that we've got on here, the amount of assets that they've got in terms of, where is it? I should have highlighted this one before, shouldn't I? Real estate mortgage loans. There you go. Real estate mortgage loans here. And you can see here that there's $145 billion in mortgage loans right now that fall within their net loans system. Now, if you've got 145 billion in loans, that's fair enough. But you can see here, that was high in 2018, but then it went down and then it started growing the amount of money that they were loaning out in real estate mortgage loans. At the same time, look at what has happened to the borrowing rate on loans. You can see here, start of this year, borrowing rate around 2.6%. Currently, the borrowing rate on a 30-year fixed rate mortgage is 6.6%, What does that mean? Well, if you've got a 6.6% of the start now, and it was only 3% at the start of this year, basically you're paying now double the amount of interest that you were at the start of this year. This is why it's unlikely that the Federal Reserve is going to hike rates, because if the Federal Reserve increases rates again, they will trigger a banking crisis, because what they'll do then is they'll trigger more mortgage defaults. If I show you this page right here, it explains about mortgage default rates here. And so the US leveraged loan default rate has already climbed to a 20-month high in February of 2023. We already know that the amount of defaults is on the increase very, very significantly. As you can see here, there was no mortgage defaults throughout this period of time here, but at the same time, mortgage defaults are starting to rise. This is a problem, because if the banks can't get the money back that they loaned out, and they loaned too much money out again, what are they going to do? Like, there is no solution other than, look, the government's got to pay for all of this stuff again. And if the government's going to pay for it, it means they've got to print more cash. They can't raise interest rates because it'll cause further bankruptcy. And if the government's going to print more cash, the price of Bitcoin's going to go up because the value of the stock market is going to rise and speculative investing is going to take off. At the same time, you'll see an increase in unemployment, an increase in new people coming on towards the crypto industry because they've lost their jobs in the traditional world and they're looking for alternative sources of income. So how have I positioned myself? Well, currently, I've positioned myself long on Ethereum, long on a bunch of other markets as well. You can see I'm currently 2.5 grand in the loss on Ethereum, 2 grand in profit on my Bitcoin trade, took $1,000 profit last night on that. At the same time, I did some risk mitigation last night because I don't like sleeping with too much money on the table. At the same time, this is my Ethereum, my Elrond trade right here, $90,000 Elrond trade, currently about $1,500 in profit. But you can see, for the most part, I'm in a bit of a loss across the board right now. I don't think that's going to be the case for much longer. I think it's going to flip. And I really am very, very concerned that we're about to see a massive banking crisis, because look at some of these stocks. Some of these stocks are looking horrendous right now. So yeah, Bitcoin looks amazing, but Bitcoin's been looking great for a while now. At the same time, Ethereum, again, looking amazing. If it breaks through this level of resistance on Ethereum, why am I positioning myself long on Ethereum? Because look, if it breaks through this level of resistance, look at the volume profile. There is literally no resistance in the chart. But Ethereum could literally just shoot all the way up to kind of these levels up here, around $3,100. My initial target was $1,800. We took profits on those trades. We waited for a dip, and I went long again. And so from my perspective right now, I'm eyeing a jump in the price of Ethereum. Also, because when you're looking at, it's this one right here, Ethereum's Bitcoin dominance, I would say that this is starting to look a little bit like an inverse head and shoulders pattern. I think Ethereum's going to really start chugging fairly soon. However, we've got an important chart that I want to discuss with you. And that important chart is on this screen. And this screen has got a bunch of different things that I put on here. So you can see Bank of America stock price. Bank of America stock is not currently trading yet, but on Friday last week, it closed around 3.97% down. At the same time, HSBC shares last week closed 4% down. These things, these major banking stocks, they're looking horrific. Wells Fargo closed 4% down. But if this week, when the stock market opens, if we start seeing a run on the US banks, if we start seeing pictures in the media of people queuing up outside banks to withdraw their cash, it's over, guys. Bitcoin's going to the moon. We're having a bull market in the middle of one of the worst financial times in history. It could be the strangest bull market that we've ever seen. In fact, no, the lockdown bull market was stranger, because that was like, everybody expected it to crash. It crashed down to $3,000 because everyone's like, oh my God, panic. And then it just went up to $70,000 a coin. I think we could be at one of those periods, a very pivotal period of time, whereby we do see huge banks going bankrupt over the course of the next few weeks. Because when you have banks that are failing, bailing out other banks that are failing, this is like FTX trying to bail out Celsius. We've already seen the dominoes fall in the crypto space. Celsius failed because of USDC. FTX also failed because of USDC, but then FTX tried to support itself by buying Celsius and Voyager. They couldn't do those deals because the balance sheet is looking terrible, and they realized that the Ponzi scheme would balloon too much in size. However, regulators in the real world, in the banking industry, have stepped in to offer $60 billion of credit to UBS for taking over Credit Suisse. This is an issue because you have now a government bailing out a bank, but they're not fully bailing it out. They're not giving quite enough money to make things liquid again. So the problem still remains. These banks, if everybody wants to withdraw from them, they cannot get their money. And if you hold more than £90,000 in a UK bank account, or $150,000 in a US bank account, or I think in Europe it's 100,000 euros in a European bank account, you are not insured if you hold more than that amount of money. Spread it across a number of accounts, or better off, Take all of your money out of the banks right now. Don't leave money in banks. Banks are going bankrupt this week. Send this video to your friends. Warn them, because if they've got above 100 grand in a bank account, don't leave it in there. These things could seriously crash just terribly. Credit Suisse, for example. Credit Suisse closed the week last week down 7%, and the takeover deal has been done this weekend. At the same time, UBS stock closed 5.5% down at the end of last week. If we look at the the weekly chart on something like UBS, the crash has only just started. It's going all the way down here. I'm very, very certain of that. But look at HSBC stock. Again, similar chart, similar kind of price action. It can go a lot lower than where it's currently at. The pain is only just starting to kick in on these things. So, yeah, on that note, guys, pain's just kicking in on the banking world. It's going to get worse. And that means our industry is going to get better by nature of being the antichrist to the banking industry. And so, yes, if you want to join us on our devilish journey in the world of crypto, do drop a like on today's video. We're trying to get 1,000 likes on it. Make sure you are subscribed to this YouTube channel. I'll update you as soon as I get more scoops. I'm going to keep you in the loops. And check out links and information in today's video description. If you want to learn more about trading, click on the trading tutorial that you'll see on the screen right now. Have a fantastic day, everybody. Thank you all very much for watching, and I'll see you in the next video. Goodbye.